Hello, my name is Mark Chaiken, Tax Policy Director of the Taxation and Revenue Department, and I'm here today to talk to you about destination-based sourcing and gross receipts tax. This presentation will discuss the recent changes to New Mexico's sourcing rules. There's a companion video that will be presented by Risvelina Escalante, the tax professional liaison. And she will also be discussing how destination reporting is going to work in the new upgraded TAP system. But I'm just going to talk to you about what destination-based sourcing is and what it means for the tax department and for taxpayers. Law in New Mexico until July 1st, 2021, was using origin-based sourcing. And so the first question is, what is sourcing generally for purposes of the gross receipt tax and compensating tax? When we talk about sourcing, we mean identifying the location where that will tell you the correct location code and tax rate to apply to your receipts when you're calculating gross receipts tax or compensating tax that's due. New Mexico, until July 1st, 2021, used origin-based sourcing, and the rules for that are contained in the older versions of 7-1-14 and 3.1.4.13 of the New Mexico Administrative Code. Origin-based sourcing essentially meant that for purposes of determining the correct tax rate to apply to your receipts, you would look to your business location, i.e., the place where your business was located. So if you had a retail establishment, it would have been the location of your retail establishment. Or if you had an office, it would have been the location of your office, and so forth. Those sections of the statute and administrative code were repealed and replaced effective July 1st, 2021. So for all receipts prior to July 1st, 2021, we used origin-based sourcing. Following that date, we use destination-based sourcing. So what is destination-based sourcing? What that means is that rather than looking to the business location of the person whose receipts they are, we'll look to the place where the services, the product of the services are delivered or the personal property is delivered. For the most part. There are going to be some exceptions that we'll get into as we go through this presentation. But again, for the most part, you will be looking to where the property that you sold is delivered or where the product of the service that you performed is delivered. And these rules are set out in the new versions of Section 7-1-14 of the statute and 3.1.4.13 of the Administrative Code. And again, those laws became effective July 1st, 2021. A first question might be, why are we doing the switch to destination sourcing? Well, in the first instance, it's the modern trend for how to source receipts. Most states have adopted destination sourcing. Out of the 46 states that have a sales tax or gross receipts tax, 35 have already adopted destination-based sourcing. New Mexico will be the 36th state to do this. There are economic reasons that justify the change as well. It better reflects the economics of the transaction and better reflects who should be receiving those tax revenues from those sales. And finally, the change also makes sense because of Nexus rules and changes to those rules. So just to give you a short diversion on what Nexus means, what Nexus is a legal term, and it refers to the ability of the state to tax an individual or a company. So only those individuals or companies that have what is called Nexus with New Mexico can be taxed by New Mexico. Up until 2018, there was a rule in place, and this rule derives from the Commerce Clause of the United States Constitution as interpreted by the United States Supreme Court. And the original rule was that you had to have some sort of physical presence. It didn't necessarily need to be a lot, but you needed to have some sort of physical presence in the state in order for the state to be able to tax you consistent with the Commerce Clause. And that kind of physical presence could be something like having property in the state, having employees in the state, or having an office in the state, things like that, where you had a physical presence of either property or employees in the state that made it okay for the state to tax you. And that was the law up until 2018. In 2018, the United States Supreme Court issued a decision known as the Wayfair decision. And that decision modernized the Nexus requirements and moved away from the physical presence requirement. New Mexico changed its Nexus requirements to conform to the Wayfair decision, and that change is embodied in Section 7-9-3.3 of the statutes. And essentially, what the Supreme Court said in Wayfair is that if a company or an individual had done a certain amount of business in the state, whether or not they had a physical presence, then it was okay for the state to tax them. And that threshold has generally been set at $100,000. So, for example, if a company did $100,000 worth of business in New Mexico in 2020, then starting in 2021, the state could tax them, could impose the gross receipts tax on that company. And the effect of this is that New Mexico can now tax and collect tax on more transactions. Under the old standard, New Mexico would not have been able to reach certain sellers. And the big example here that I think everyone will probably be familiar with is Amazon. Amazon, for example, had no physical presence in New Mexico. They didn't have an office, they didn't have employees, and so New Mexico couldn't impose gross receipts tax on Amazon's receipts. Now they can. So there's a huge number of transactions now that before New Mexico could not tax, but now it can. And that means that its revenues have increased because we're now able to reach more transactions. And destination sourcing evens the playing field between in-state and out-of-state sellers. So it's sort of a complement to the Nexus, the new Nexus rules. Because say, for example, you had Amazon and we had origin-based sourcing. Well, if there were a New Mexico company selling, say, some tangible personal property to a customer, and we were using origin-based sourcing, that company would have to use the local rate, which would be the state GRT rate of 5.125%, plus any local option taxes that the local government in question had imposed. But if it were Amazon and they were out of state and we were continuing to use origin-based sourcing, then Amazon would only have been liable for the 5.125% state rate and would not have had to pay the local option rate in addition. So Amazon would have had an economic advantage because buying from them would have been cheaper for a customer than buying from a New Mexico business. When we move to destination sourcing, what this means is that out-of-state sellers are going to be treated the same as in-state sellers. So they're not going to have that tax advantage anymore. And so this should be a net benefit to New Mexico businesses by making them equally competitive with out-of-state sellers. The changes are first of all embodied in Section 7-1-14. The statute sets out the changes, and the regulations supplement but do not and cannot change the statute. TRD simply cannot go beyond the scope of what the legislature has passed in the statute by means of regulation. So all the regulations do is supplement by providing additional information and some examples of what is done in the statute. While this is a very big change, I also want to make everyone aware that there are other corresponding statutory changes that complement the changes being made to sourcing. A big one is the change to 7-9-13.1, which also became effective July 1st, 2021. That statute previously, before July 1st, held that services performed outside of New Mexico, the product of which was initially used in New Mexico, were not subject to gross receipts tax. So if you had hired someone outside the state to perform services and they had Nexus with New Mexico, meaning they were liable to pay the gross receipts tax, they would get a deduction. Those would be actually exempt. They wouldn't have to report them if the product of the service was initially used in New Mexico. But now that's completely reversed. So those receipts from performing services outside of New Mexico, where the product of the service is initially used in New Mexico, will now be subject to gross receipts tax. Another effect of adopting destination sourcing is to shift more taxes to gross receipts tax instead of compensating tax. Compensating tax is the tax that complements the gross receipts tax, and it's imposed on the purchaser when the seller isn't liable for gross receipts tax. So before the change to Nexus rules, if you were buying a product from Amazon, Amazon wasn't liable for the gross receipts tax, but you, as purchaser, were theoretically liable for the compensating tax. But because sellers from out of state, such as Amazon, are now subject to gross receipts tax, their fewer transactions should be subject to the compensating tax. But it's useful to bear in mind that the compensating tax complements the gross receipts tax in most cases. In order to understand Section 7114, we have to look at the categories of receipts. While I'm going to be discussing just the gross receipts and compensating tax here, there are some more limited taxes that are also affected by this change to destination sourcing, two primary ones being the interstate telecommunications gross receipts tax and the leased vehicles tax. So if you have questions about those, we recommend that you look at publications that are available on TRD's website that discuss these taxes. So sourcing under 7-1-14 is affected by the type of economic activity giving rise to the receipts. And you'll see there are 5 categories here, each having slightly different rules. There's rules for transactions involving real property, rules involving sales of tangible personal property, or TPP, transactions involving the lease of TPP, transactions relating to franchises, and transactions relating to services. And you can see that there's different subsections of 7.1.14 that deal with each of those. And we're going to go through them in turn. I think it's best to start with the easy cases. And these are cases where there's no change actually from existing law, because these sourcing rules were already in effect under the old version of the statute and the regulations. So transactions relating to real property are sourced to the location of the real property. So just to read from the statute, the business location for gross receipts from the sale, lease, or granting of a license to use real property located in New Mexico and any related deductions shall be the location of the property. And again, that's no change from existing law. Transactions relating to construction. These are really dealt with as a special type of services. It doesn't have its own subsection in the statute, but these are generally going to be sourced to this construction site. It can include services incidental to construction, and you'll see on the slide I have some references to the regulations and to the specific subsections of the regulations that talk about construction services. We're going to, when we start talking about services, there will be a special case of architectural services, and that's what one of these references to. And we'll talk about that in just a little bit when we come to talk about services generally. Another fairly simple case is franchises. Receipts from the sale or lease of a franchise are sourced to where the franchise is used. The regulation, which is 3.1.4.13C8, expands on the statute and explains it. So in order to determine where a franchise is used, you look first to the franchise agreement. So the franchise agreement will generally set out, say you have a franchise to operate a Subway restaurant. The franchise agreement should set out where that franchise is going to be located, where you can operate. So if that isn't the case, if you don't find that in the franchise agreement, you can look to other facts and circumstances to determine where the franchise is used. And sometimes there can be multiple uses of the same franchise, and there are special rules that relate to that. If you have questions about a franchise that can be used in multiple locations, multiple reporting locations, look to the regulations. And if that does not answer your question, please contact TRD, the policy office, at policy.office@state.nm.us. Moving into more common scenarios, let's talk about sales of tangible personal property. Here, the statute and the regulation provide what we call a waterfall of rules to follow. So you would start looking at the first rule, and if that doesn't apply, you go down the list. There's 5 of them until you get to the one that does apply. And the last one, number 5, is a catch-all. So everything should be covered by the statute. The first thing I want to note is the statute avoids problems of transfer of title or risk of loss. So often when we're trying to decide where a sale takes place, where a sale of tangible personal property takes place, we look at certain indicia like where did the title transfer or who assumed the risk of loss and when. And these can be very tricky legal questions. The statute, I think, very cleverly avoids these problems, and instead of referring to sales, it says where the property is received. And so again, quoting from the statute, and this is subsection C1, it says the gross receipts, the business location for gross receipts from the sale or license of tangible personal property are going to be where the property, in the first instance, is received by the purchaser. So if the purchaser receives the property at the place where the sale is made, that is the location for sourcing purposes. So, for example, for many common retail transactions, if a customer walks into the store, purchases the property, and leaves the store with the property, that purchaser has received the property in the store, and the store location will provide the location code. So for many businesses, as a practical matter, this means no change for the seller. It still uses its business location. So, for example, if you're a furniture store and you're selling a small item that someone walks out with, that's going to be no change for you from origin to destination-based sourcing because the destination is going to be the same. But for other types of sales, there are going to be changes. So if the property is delivered, then in the first instance, the seller should use the information provided by the purchaser. What that means is, again, going back to a furniture store example, if a customer walks into the store and says, I would like to buy a couch, and purchases a large piece of furniture like a couch, they're likely not going to be leaving with it. Obviously, in some cases they might, but most often they're going to be asking to have that property delivered. So that will be a change. Now the store, the seller, must use the location where the property is delivered and received by the purchaser. Now, the seller is entitled to rely on the information provided by the purchaser in most cases. And it should not matter if, for example, the purchaser uses a P.O. box. The seller is not required to determine where the purchaser will ultimately take or use the property. So we have received some questions about, well, could people game the system essentially by having property delivered to a lower tax jurisdiction? For example, municipalities often have a higher GRT rate than the surrounding unincorporated areas of a county. And so someone might choose to have property delivered to the county and then take it back to either their business or their home where they're ultimately going to keep and use the property. There's really no way we can do that, and we can check on that. And we certainly can't require sellers to go beyond the information that is provided to them by the purchaser. So if you're a seller, you are entitled to rely on the information provided by the purchaser. And so this should cover a great majority of the cases. Either the purchase is made of the property is made in the retail store or wherever the site, the business location of the seller is, or it's delivered to the purchaser at a different location, and that will then provide the location code. However, there are other rules that apply if neither of the first two provides the required information. In the first case, following these two, the seller is entitled to use information contained in their business records. So, for example, a purchaser and a seller may have a long-standing business relationship, and the purchaser calls up the seller and says, I need, for example, to buy a box of paper clips. Say they're calling someone who supplies office supplies. And so they don't provide an address when they place the order because they know that the seller knows where it's going to be delivered because that's already in their business records. And the seller is entitled to use those business records instead. So that could be another common case, again, where there's a long-standing business relationship or where the seller has information in their business records that they can use. Another case is use information obtained during consummation of the sale. So if the other examples don't apply, then you can use the information obtained during consummation of the sale. And a case like that might be where someone orders something, they don't provide a delivery address, but at the time of the purchase, but they do later provide that address. Or it could be perhaps their credit card billing information. That's something else that could be used during the consummation of the sale if there's no other way to determine where the property is going to be delivered. And if none of those are available, then the seller can continue to use origin-based sourcing, i.e. their business location. There are going to be some odd or unusual situations. For example, simultaneous sales to multiple locations. We can see this, for example, in the case of digital goods, which are dealt with specifically in the regulations under 3.1.4.13, and it will be subsection 5E of that regulation. And it says if gross receipts are derived from a single sale or transaction, where the property or product of a service provided is determined to be delivered simultaneously at multiple locations throughout the state, the sellers deem not to have sufficient information to determine the reporting location. And then again, you go back to use that origin-based sourcing, that last rule where you continue to use your business location. And that may sound unusual, but consider digital goods, for example, that can be delivered simultaneously over the internet to multiple locations. For example, if we're talking about educational services or some other things like that, the product of the service, which could be a lecture or some other educational materials, could be delivered simultaneously to multiple locations. There are also special rules in subsection D of that same regulation dealing with what we call mixed transaction rules for sales with multiple reporting locations. And what that means is where a single transaction gives rise to gross receipts that would have different reporting locations if they were provided to the consumer in the form of separate transactions, then there's multiple rules for determining how to do that. They're a little complicated to go into in a lecture like this, but do look at subsection D of 3.1.4.13, which addresses how to report those types of sales. So for something like that might be where you sell something and there's also shipping charges associated with it, or where there's a service and a tangible personal property involved in the sale. And so then you would look to those rules under subsection D of the regulation to determine how to report those receipts. Leases of tangible personal property, as opposed to sales or licenses of tangible personal property, you use the location of the primary use of the property. And the regulations, again, put flesh on that and say primary use means the place where the TPP is used the majority of the time. And again, the seller is entitled to rely on information provided by the purchaser or available in the seller's business records. So if the seller is told by the purchaser to that the lease is going to be used at their office location, then the seller is entitled to rely on that in order to determine the correct reporting code. And it's important to note that primary use is not altered by occasional or intermittent use of the tangible personal property at a different location. So say there's a piece of equipment that's leased to a purchaser or a lessee, and it's primarily used at the office, but occasionally the employee who is using the equipment has to take the equipment out to visit a client of that business. That won't change the primary use. And the seller is entitled to continue to rely on the information provided by the purchaser regarding the primary use, the place of primary use of the property. Services are the hardest under the destination sourcing rules. And taxation of services can give rise to more complicated issues than other objects of taxation. And I note here that New Mexico is one of only a few states that actually does apply a gross receipts tax or sales tax to services. So these are some issues that can be unique to New Mexico, given that we do tax services. It's also important to note that statutes continue to rely on the distinction between performance of a service and the product of a service. So often when we look at the gross receipts tax statute, we'll see that the statutes talk about either the performance of a service or where the product of a service is either delivered or initially used. And it's very important when you look at the statute and look at the regulations to remember that distinction, because most often we're going to be looking at where the product of the service is delivered or initially used to determine the location code, and not where the service is performed. And those things can often be very different. So you can perform a service in one place, but then deliver the product of that service to an entirely different place. Again, there are categories of services, and the first step in any analysis needs to be a determination of what type of service is involved. In the first case, the statute distinguishes between professional services and other services. And the definition of professional services, which I'll talk about in just a moment, is set out under 7-1-14K4. And then, if we're dealing with professional services, we need to further analyze and say, are those professional services in person or not in person? And what is in person is defined under subsection K3 of the same statute. And so determination of the nature of the service, whether it's professional or not, whether it's in person or not, will determine the sourcing rules for that service. So there's got to be an analysis every time you look at a service to make these determinations, professional or not, in person or not. So what are professional services? These are services that either require an advanced degree from an accredited post-secondary educational institution, or that require a license from the state to perform. So an advanced degree is a master's degree or higher level. So again, it's important to remember it needs to be required. Many people may have advanced degrees, and that may make them better at performing their jobs or providing the services, but it has to be a requirement. So for example, to be a lawyer, you have to have an advanced degree, a JD, from an accredited post-secondary educational institution. So that word requires does a lot of work, and simply because someone has an advanced degree while they're performing a service doesn't mean it's a professional service. The advanced degree has to be a requirement to perform the service. Now, common sense or received ideas of what is a professional service may be misleading. Many occupations require licensure from the state, which we may not ordinarily consider to be professional. So most people think of professional services as legal services, medical, accounting, and auditing services. Those are the three big categories of professional services in common usage. But many services in the state do require a license to perform. For example, in order to be an engineer, provide engineering services, you need that. In order to provide architectural services, you need that. And to provide barbering services or cosmetological services, you need to be licensed from the state. So even though it may not on first blush appear to you that it's a professional service, it's very important to ask, do I need to be licensed by the state to perform that service? And if the answer is yes, then it's a professional service. Conversely, some services that may be thought of as professional may not require licensure or an advanced degree, and therefore not be professional within the meaning of the statute. So, for example, management consulting services, will probably find that most management consultants have an MBA or a similar advanced degree, something like that. But in order to be a management consultant, no licensure is required, and in fact, you don't need an advanced degree. Many people rise very high in corporate culture without anything more than a BA or even sometimes a high school diploma. And they may, once they've achieved great success, decide to provide management consulting services. And that will not be a professional service because a degree is not required and a license is not required. So don't rely on common sense, don't rely on intuition to determine what is a professional service. Look to the statute. Does it require an advanced degree, or does it require a license from the state? Once you make that determination, you'll know whether it's a professional service or not. Once you've determined that a service is professional, you need to make a second determination as to whether that service is in person or not. And generally, the statute says that a service is in person if the service provider is required to be in the same location as the person or the property upon whom the service is performed. And that, again, is set out in subsection K3 of 7-1-14. And in the regulations, we give some examples of common professional services that are not considered to be in person. So accounting, auditing, and tax preparation services, appraisal services, legal services, and some telehealth services. In particular, mental health services, which due to COVID, but even before COVID, were increasingly not done in person, are not considered to be in person, with certain exceptions that are set out in the regulation. So again, because of COVID, but even before, many people were remotely seeing a mental health professional. And so those services are not in person because you're not required to be in front of the professional in order to provide those services. Those professional services will continue to use the business location or origin-based sourcing. So that's no change, and this is a big exception to the general destination sourcing rules. So if, for example, you're a lawyer and you're providing legal services, and that may be including some visits to your clients, some appearances in court, visits to other locations, it doesn't matter. Those are not in-person services, and you will use the location code for where your office is located. Same is true, for example, for accountants. And there's no change in that just because there's some incidental in-person services. So, for example, if you're an accountant and you're doing most of your work in your office, it's not going to be in person. And just because maybe you need to go to your client's office to meet with your client, or maybe go to your client's office to look at books and records, that's not going to change the nature of the services to be in person. They're still going to be not in-person services. So just because there's some incidental services that need to be, part of the service needs to be performed in person, that's not going to change the nature of the service, and you're still going to use your business location, or which means the location of your office. Professional services that are in person. The regulations also give common examples of in-person professional services. So most healthcare services, athletic trainers and physical therapists, barbers and cosmetologists. So again, if you're seeing a physical doctor, someone who's treating you, most likely they're gonna need to look at you, examine you. If you're seeing a barber, they're gonna need to be with you to cut your hair, and so forth. So where you are required to be in the presence of the person or the property in order to perform the service on the person or the property, those are going to be in-person services. But again, as with non-in-person services, just because some services may be performed remotely, that doesn't make the services not in person. So you've been to your doctor, they've examined you, and maybe the doctor then has to follow up with a phone call and says, well, I just want to ask about another symptom, or I just wanted to follow up with to get some more information. It's still in-person services. So just because there are some incidental remote services doesn't convert the services from in-person to not in-person. These services will be sourced to the location where the product of the services is delivered. Special rules apply to construction-related services. So, for example, architectural services where they're part of a package, a construction of an overall construction service. So, for example, where you hire someone to not only create architectural plans, but then also to actually build the building or the structure that's involved, you're going to use the location where the construction takes place. Sometimes the state rate may apply. For example, a professional service performed out of state where the product of service is initially used in New Mexico. And if you'll remember, I mentioned at the beginning the change to 7-9-13.1. Formerly, those receipts would have been exempt. Now they're taxable. And so if someone is out of state and performs services for you, but then you use that product in New Mexico, an example may be you hire someone out of state to write some copy for you, but then they send it to you in New Mexico and you use it in New Mexico, those receipts are going to be taxable. But because you're using the business location, you're going to use the out-of-state rate of 5.125%. And again, just because the services are performed in one place, it doesn't mean that's where the product of the services is going to be delivered. And that's that distinction I mentioned at the very beginning. Very important to remember that the place of the performance of the service is not necessarily going to be the same as the location where the product of the service is delivered. And it's the product of the service that controls. For other services, i.e. Not professional services, whether in person or not, rules are the same as for in-person professional services. The location for sourcing is the place where the product of the service is delivered. You always have to define the product of the service. This is required by case law from the New Mexico Supreme Court, which held that every service results in a product. We do have regulations that are forthcoming that help define what the product of the service is. It can be tricky to define what the product of a service is. Sometimes it's very clear. For example, if you've hired someone to perform a service that results in a written product or an analysis or something like that, you're going to know what the product of the service is. But there can be hard cases. And so you always do need to establish what the product of the service is so you can establish where it was delivered and then establish your location code. I do want to point out there are also special rules for advertising. There's a site there. If you are dealing with advertising, we do recommend that you look at that. But the regulation very briefly says that the delivery of the product of the service is the location where the ad may be heard or seen by the intended audience. So the product of the service is going to be located, it's going to be an ad, for example, and you're going to use for sourcing where that ad is going to be seen or heard. There are special rules for pueblos and other sovereign entities. The rules generally only apply where there are cooperative agreements. Cooperative agreements are agreements between individual pueblos and the Taxation and Revenue Department that call for administration and sharing of revenues of gross receipts taxes between pueblos and the state. For those pueblos with cooperative agreements, destination sourcing actually already usually applied. So the switch to destination sourcing won't make that much difference for those entities. We are continuing to work on solutions for those entities lacking cooperative agreements. If you have any questions, again, this may be an area where you want to submit a question either to the pueblo in question or to the Taxation and Revenue Department to policy.office@state.nm.us. Let's talk briefly about the reporting requirements. Sellers and purchasers subject to the compensating tax must use the correct destination code when reporting gross receipts. And it's very important here because errors in coding have knock-on effects on local governments when returns are amended. Again, when you're paying gross receipts tax, you're not just paying the state rate. There's also often local option rates that you're paying. And there are distributions made to local governments based on those codes. And so when you get a code wrong and the return has to be amended, that means that one local government is going to gain some revenue, but another local government is going to lose revenue. And in large cases where there's large amounts of revenue at stake, this can have very, very serious effects on local government budgets. And so we definitely ask that people be very careful in determining the correct location code. Now, there is a map available on the TRD website that is a very good tool, and it allows you to enter the delivery code, the delivery address, for example, if we're talking about tangible personal property, where the property is going to be delivered. And all you do is enter the address, and it gives you both the location code to enter on the return and also the applicable tax rate. So really, it's very important to get this right because it has a very serious effect on local governments when it gets wrong. And on the Taxation and Revenue Department, it results in a lot of administrative effects. And so the map makes it very, very easy to determine the correct place and the correct location code and rate to use. So we do encourage everyone to look at that map, use it. It's very simple to use, and it's a very effective tool that will help you get all your reporting right. When you're reporting receipts from multiple locations, you do have to report them to each location. So if you have receipts that are going to be sourced to, for example, Bernalillo County, and some receipts that are going to be sourced to Sandoval County, you need to report those separately on your gross receipts return. And Rosalina will be talking about that in her presentation. So if you have questions about how this works in practice, we strongly recommend that you look at that video that will be available on the TRD website and follow the instructions that Rosalina will go through there for you. There's two types of situations also where this can occur that we discussed briefly. There could be one transaction that would have different reporting locations if they were treated as separate transactions. And that was subsection D that we touched on, 3.1.4.13D, that said, well, if you're billing it as one transaction, but it could be broken out into separate transactions, there's rules for that. And then there's the other case that we talked about where one transaction where the property or the product of a service is delivered to multiple locations simultaneously. That was the digital goods example. And there's a special rule that we told you about, which is you continue to use origin-based sourcing. This may sound very complicated, and we do understand that here at the Taxation and Revenue Department. Most businesses will now have multiple reporting locations rather than just one. So previously you could just use your business location, meaning the place where your business was located. Now many businesses, especially those that deliver products of services or property throughout the state, are going to have multiple reporting locations. And there may be costs associated with complying with the law. However, destination sourcing is already the law in the large majority of the states. As I mentioned previously, New Mexico is actually the 36th state to adopt destination sourcing. So there is software, there are programs available for this. Compliance costs should already have been built in for large sellers. There will be an impact on smaller sellers. And Tax and Rev is aware of the concerns, but we are obliged to follow the statute. And we do not have authority to make exceptions for particular businesses or to extend the time for compliance. We have received requests to do that, and unfortunately, we're simply not able to do that because we are obliged to follow the statute. However, because we are aware of this burden and this change may impose on businesses, I want to draw your attention to the use of estimates. Subsection 3.1.4.13F discusses the use of reasonable estimates, and the law allows taxpayers to use those reasonable estimates to determine reporting locations for gross receipts. So if you can reasonably estimate, for example, that 80% of your revenues are sourced to Bernalillo County, but 20% are sourced to Sandoval County, you don't necessarily have to keep track of each individual transaction. There's a lot in that subsection F that I would encourage people to look at, but it does reduce the burden of compliance for a lot of businesses, and we encourage you and tax professionals to look at that subsection F to see whether you can use that subsection to ease the burden of compliance. So here's finally a little chart that talks about how destination-based sourcing will affect reporting, and this is again for all receipts incurred or received July 1st, 2021 and following. So general services or other services and in-person professional services and sourcing relating to tangible personal property changes from origin to destination-based sourcing. Professional services, which are services other than in-person services that again require an advanced degree or a license from the state to perform, there will be no change. Those remain basically origin-based sourcing to the business location of the service provider. And finally, construction services and real estate commissions and other sales, leases, et cetera, of real estate, there's no change. Those remain destination-based where the construction takes place or where the real estate is located, and so there's no change from existing law. So how does destination-based sourcing affect reporting? Analysis of in-person professional or general services can be complex, and taxpayers are encouraged to seek professional advice if they have questions. You can also seek advice, again, from the Taxation and Revenue Department at policy.office at state.nm.us, or by calling the call center at the information that's available on the Taxation and Revenue Department website. Factors affecting taxability include whether the service is initially used in state or out of state. So again, we looked at Section 13.1 of the Gross Receipts and Compensating Tax Act that talked about services performed outside of New Mexico, the product of which is initially used in the state. So those kinds of factors affect the taxability and can also affect the correct determination of sourcing. These questions can be complicated, and again, we strongly encourage you, if you have questions, to seek professional advice from a tax professional or to contact the call center or Taxation and Revenue Policy Office. And that's what I have. And again, I strongly encourage everyone to now turn to the video that's by Rusvelina Escalante that tells you how all of this is going to work in practice on the TAP reporting system. And thank you very much for your attention, and we hope this has been helpful.